Hello and welcome. You're watching Business Today Television. I'm Sakshi, Batra, and this is the earnings special edition where our focus is on Biocon's earnings. We do know that in quarter two of the fiscal year 2025, the company has reported total consolidated revenue, which has come in flattish at 3,623 odd crore rupees. What we've also seen is that the revenue from operations have seen an uptick of about 4 odd % for the company. And when we, of course, see the adjusted Q2 FY24 revenue on branded formulations, the uptick is about 8% on a year-on-year basis. The core EBITDA has been reported at 992 odd crore rupees. It reports a core operating margin of 28%, whereas for the operational performance, EBITDA for the quarter stood at 718 crores, representing a margin of about 20 odd % as well. This has been on a downtick when we compare on a year-on-year basis as well. This is despite the net R&D investments for the quarter at 200 crore rupees, representing 7% of the revenue right there, excluding of Syngene, but this has also been on a declining trend as well. For the quarter, the company has reported a net loss of about 16 odd crore rupees. Of course, this is barring the adjustments that have been declared by the company as well. And adjusting for exceptional items, the loss stands at 13 odd crore rupees. Let's get in the top management to talk about the earnings this quarter, the key highlights, and of course the outlook going forward in the second half. Mr. Siddharth Mittal, he's the CEO and the MD of Biocon Limited, and he's now joining in. Warm welcome to you, Mr. Mittal, and thank you so much for taking the time out to explain to our viewers what has worked for you in this quarter, what has fallen short of your expectations, and going forward, what are the expectations that we as investors and viewers should be building in from Biocon in H2. So especially when we talk about large part of the parameters, they seem to be on a muted or rather on the weaker side. Could you detail for us if there has been large one-offs that we should be seeing this through that lens in Q2, or there could be a recovery in sight soon as Q3 also has begun? How would you really explain to our viewers what has actually gone into this quarter?
So very good morning, everyone. And I think it's you summarized the results very well. I think quarter two has been a bit of a challenge, but it was in line with the expectations and the guidance that we had given at the beginning of the fiscal year and also at the end of quarter one. I think there were known factors which we were aware of, which impacted the growth. So let me start with biosimilars business. Adjusted for the branded formulations business sold at the beginning of the year, the revenue growth was very strong, 19%, though the reported growth was 11%. And as you know, this is, of course, the biggest segment for us.
Yes.
And the growth was broad-based. We continue to grow our products in the US market. So pegfilgrastim, biosimilar pegfilgrastim is tracking at almost 18% market share in the US. Biosimilar Ogivri is also at that 20% market share. Semglee continues to hold mid to high teens market share along. So it's been a good performance in North America. Our emerging markets continue to deliver a good good revenue growth, and Europe continues to stay stable. So that delivered a good 19% growth on a year-to-year basis in biosimilar segment. Now, when I come to generic segment, we have seen a degrowth of 8% in this business. A large part of this business, the degrowth came from pricing pressure and the contracted pricing to some of our customers, which came into effect at the beginning of the year. We also had to take facility shutdown during second quarter
Yes.
to enhance the capacity of some of our fermentation facilities, and where we will see the impact of additional revenues coming in from quarter three onwards.
Okay.
While the overall
Yeah.
volume in generics business did grow when I look at in quarter two versus quarter two of last year. And
Okay.
Syngene had a modest degrowth of 2%. Again, this was in line with the customer contracts and the delivery schedules which were there. And so overall, as you mentioned, 8% revenue growth on a like-to-like basis, excluding the effect of branded formulations, which was in line with our expectations and the guidance that we had given to the market.
Right. Mr. Mittal, do highlight for us on the margins front. I think this is a concerning point right here, that despite the R&D expenses falling down substantially, 24% this time around year on year, there has been a continued pressure on the margins. What else is contributing to the margins downtick over here? By when do you see a recovery in shape? And for H2, what is the kind of trajectory you're expecting?
The core EBITDA margins are down by 4%, which is a combination of two things. Of course, one is the gross margin largely has remained stable. It's gone down from 47 to 46% at a group level. However, the expenses have gone up, as you can imagine that every year we have cost increases, the inflationary increases, and the expenses have gone up this year. And the second thing is we have had one-time impact of on account of currencies. So Japanese yen strengthened against US dollar, which led to a $9 million uh, forex loss during the quarter.
Correct.
Now, since the closure of second quarter, we've seen again US dollar strengthen a bit, so we expect that effect to partially reverse in Q3. But directionally, when I look at the margins, what you've seen in quarter two, I won't guide necessarily at this stage. Would there be an improvement in quarter three or quarter four? I think the margins would fluctuate within a band of 2 to 3% plus minus. And still, we have seen a very strong core margin. And even at biologics level, it is a strong 32% operating margins. Now, our R&D, of course, as you mentioned, has been lower at 7%
Yeah.
of top line, excluding Syngene. This tends to be lumpy. It all depends on our program progress, various development pipeline. And overall, we have guided the R&D expenses to be in the range of 6 to 8 or 9% on a full year.
Okay.
So we could see an increase in R&D expenses in the coming quarters. But we have various new launches coming up, which should drive the margin up. We, of course, are working on cost improvement programs for our various molecules. And as the revenue grows, of course, there is a large part of the cost which are fixed costs. So we should directionally in the quarters to come see an improvement in the margins.
Okay, and what do you end the year with, sir? Any key band that you're looking at for the margins?
As I said, I would not hazard a guess. There are still
Okay.
various moving parts. Of course, a lot depends on finally the pricing because the costs to a large extent are under our control, but pricing is competition driven, and there are a lot of new contracts coming up for renewal in the for the calendar 25. So a lot depends on it as well, and of course the pricing of our new product launches that are anticipated in quarter three and quarter four.
Okay. You also received a few drug approvals in the US, UK, and EU markets as well. How are you really looking at those supporting the top line or the sales for you in H2, sir?
So what we have guided again that H2 is going to be stronger or half for us. We expect growth across the three segments in H2. In generics, we have got multiple approvals either in US or in UK, and expecting few more approvals in Europe, and these will drive the growth. We also would have impact of some of the newer volumes that we have won and the expanded capacity, which I mentioned that we had taken a shutdown in Q2, and the facility will resume its operation in quarter three. So we do expect our base business to grow, new launches in US and Europe and UK. More specifically, this month we are launching liraglutide in the UK. That will drive the growth. As far as biosimilars are concerned, again, we continue to launch drugs in various emerging markets. So we continue to target higher market share uh, in the US for the products that are already launched. And one of the key products that is coming up for launch in the US is biosimilar ustekinumab, which is expected to be launched in quarter four, of course, subject to facility clearance.
Okay.
And in research services, the growth is going to be driven by various contracts, which are where we know that the deliveries and are expected in quarter three and quarter four. So there is a a very strong order book and pipeline, which is going to fuel this growth for research services vertical.
Hmm. Since you did talk about some of your facilities clearance, I think you've received two separate US FDA surveillance inspections on your API facilities on both sides of in Bengaluru. How are you really looking at this progress going forward from here? How soon do we look at an addressing of all the issues? By when do we see a clearance coming in? Do you think that can happen in H2 itself?
Yeah, so these were, surveillance inspections, as you mentioned, which were
Hmm.
conducted in July. In one of our facilities, we had three observations. In another facility, we had four observations.
Hmm.
We have responded to both the 483s with a CAPA plan, and
Yeah.
we expect FDA to determine the status within this quarter.
Hmm. Okay. Also, sir, can you help us understand as far as your overall geographical market share is concerned? Where are you consistently able to grow your market share? Where do you think it is still taking a lot of time because of intense competition, etc.? How would you really look at, say, the markets of North America, European expansion that you've been doing? You're talking about multiple launches there as well. So, how do things stand right now, and where do you see them going forward in H2?
US continues to be a good market where we have seen a very strong penetration of our drugs, as I mentioned earlier. And we do expect to gain more market share in the US, especially for products such as biosimilar glargine and Semglee. Um, Emerging markets again continue to be a very important base for us. A large part of our revenues today come from emerging markets. There are multiple countries, multiple products launched in these markets and will be launched in the coming quarters. Europe, of course, we have had a very good success, especially when you look at drugs such as biosimilar adalimumab, where we have a very strong 18% market share in Germany, 11% market share in France. But European market continues to be quite competitive. There are many companies. The competitive landscape there is quite, I would say, difficult. There
Hmm.
are the dynamics, and as we know, Europe is comprised of 30 different market dynamics, and things change quite rapidly in Europe. So we would definitely be focusing to see what our teams can do to continue to increase market share for the products which are already launched and have a successful launch of the upcoming products.
Okay, got that. And do also help us understand going forward from here, what will be the two or three key triggers that we should be really looking forward to in terms of growth from here on to continue to recovery for for the company to be shaping up as well in H2. And even in FY26 now, as we look forward, what is the kind of outlook that you would have? Will we see FY26 shaping up much better than an FY25 and FY24? Just to get a longer term sense for all our viewers as well.
Yeah, so the key growth drivers are going to be, of course, new launches. We would, while look at increasing the market share for the existing products, but if you have to really move the needle, then the new launches become very important, both for generics and biosimilars business. And as I mentioned, that there are, at least in the generics business, multiple launches lined up. But the most important of that is liraglutide, which
Okay.
is due to be launched in the UK this month. That's when the market opens up. So we are looking at day one launch of that product in UK. We are expecting our approval from the European regulators by end of this quarter, followed by a launch within few months because then you have to register the product in each European country. And that would be a key growth driver for generics business in FY26. Coming back to biosimilars, as you know, that we have three products which are pending approval in the US, which
Yes.
are biosimilar aspart, biosimilar bevacizumab, and biosimilar ustekinumab. All these three products have been approved in Europe. We have responded to the 483s to the FDA, and once the FDA determines the outcome. And we are optimistic that we will clear the inspection outcome in our favor, and we'll be able to get the approval and launch these drugs. And these three products would drive growth, especially in the US. I already mentioned about emerging markets. We continue
Yes.
to see strong demand for our products. We look at launching new drugs in newer markets, expanding the existing products. And Syngene, again, it's the discovery services continues to be strong. The development services on the biologic side is strong on the manufacturing side. And we of course continue to add more clients on research services. So it will be a broad-based growth, a combination of multiple factors.
Sure.
And FY26, of course, is going to be an important year. I mean, we have been at the inflection point, and subject to the facility clearance, we definitely are very optimistic on the growth coming back in FY26 over FY25 and 24.
Okay, wonderful. All the best to you, Mr. Mittal. Thank you so much for speaking to us and highlighting for us the key insights into this earnings as well as an outlook going forward from here. I wish you all the best for the upcoming quarters, and here's hoping to catch you soon around the next quarter to see the development over the next 3 months as well as the outlook as we have been discussed as to whether it's on track. Thank you so much.
Thank
Appreciate
you.
your time with us on Business Today.
Thank you.
All right, viewers. So I hope this has given you enough clarity from the management's perspective as to how they are going to be driving the company going forward from here. The key factors that they are really banking on for growth to come back in the second half, and of course continue over FY24 and FY25 and escalate going forward from here as well. And of course, the key launches that we will be continuing to keep an eye out on from Biocon's perspective. Do stay with us on Business Today Television as we continue to get you interesting conversations around earnings, insights, as well as market masters talking about what is really happening in the markets. So stay tuned. There's a lot more lined up for you on your screens.
If you like the video, do like, comment, share and subscribe.